On August 3, 2025, the Philippines faces a defining moment in its history. The nation stands at a crossroads deciding whether to embrace a sweeping trade and investment deal with China, a move that could redefine its economic landscape. This decision follows tense negotiations with the U.S., which recently imposed a steep 19% tariff on Filipino exports, barely avoiding an even harsher rate. The U.S. has been a long-standing ally, but recent economic pressures have strained this relationship. The U.S. deal offers stability and a sense of security, but at a higher cost, pushing Manila to consider alternatives. China's offer is tempting: vast infrastructure investment, easier loans, and access to a billion-strong market. The potential benefits are enormous: modernized infrastructure, new job opportunities, and a significant boost to the economy. However, these come with strings attached, but the stakes are high. Aligning with Beijing could mean economic growth and modernized infrastructure, transforming the Philippines into a regional powerhouse. Yet, it also brings risks to sovereignty and regional stability. The South China Sea remains a contentious issue, with territorial disputes that could escalate tensions. The Philippines must weigh the promise of prosperity against the perils of proximity to a powerful neighbor with whom it has ongoing territorial disputes. The decision is not just about economics but also about national security and identity. The world is watching as Manila's choice could reshape alliances and strategies across the Indo-Pacific. Global powers are keenly observing, knowing that this decision could shift the balance of power in the region. Will the Philippines gamble on China's promise, or stick with its traditional ally? The stakes are incredibly high, and the decision will have long-lasting implications. The answer will echo for decades, shaping the future of the nation and its place in the world. The Philippines' dilemma unfolds at the heart of a rapidly shifting global order, where the stakes have never been higher for small and medium-sized nations. In 2025, the world is defined by a fierce and escalating rivalry between the United States and China, two superpowers whose ambitions and strategies are reshaping the entire Asia-Pacific region. This rivalry is not just about military might or diplomatic posturing. It's about economic influence, technological supremacy, and the power to set the rules of global trade. The Philippines, like many of its neighbors, finds itself caught in the crossfire, forced to navigate a complex web of alliances and economic dependencies. The U.S., under President Trump, has doubled down on protectionist policies, wielding tariffs and leveraging military alliances to pressure countries into its economic orbit. Already, 33 nations have accepted new, higher tariffs, reshaping their trade relationships in the process. Washington's message is clear: align with us or face economic consequences. The Philippines' recent 19% tariff deal with the U.S. was a direct result of this campaign. While it secured continued access to American markets, it also meant higher costs for Filipino exporters and growing unease among local businesses, who worry about the long-term impact on the country's economic independence. Meanwhile, China is countering with a different approach, offering generous economic incentives, infrastructure investments, and expanded trade through its ambitious Belt and Road Initiative. Beijing's strategy is to present itself as a partner in development, promising shared prosperity and regional connectivity. As U.S.-China trade tensions simmer and occasionally boil over, Beijing quietly deepens its ties across Asia, building relationships that go beyond trade to include technology, education, and even security cooperation. For many countries, China's offer is tempting, but it comes with its own set of risks and dependencies. For Manila, the choice is stark and fraught with uncertainty: remain tethered to the U.S., its long-standing ally, or seize China's offer and risk the consequences of alienating Washington. Each path carries profound implications for the nation's future, security, and prosperity. As the Philippines weighs its options, the balance of the entire region hangs in the outcome, with neighboring countries watching closely to see which way Manila will turn. A deal with China would slash tariffs on Filipino goods, opening the door to a massive new market, especially for agriculture. Billions in Chinese investment could transform Philippine infrastructure: airports, railways, ports. These projects promise jobs and growth but come with strings attached, loans that may cede control if payments falter. Unlike Western deals, Chinese agreements often skip strict labor or environmental standards, raising concerns about quality and oversight. The risk rapid development could lead to debt dependency or loss of key assets. Manila must ensure its own regulations are strong enough to protect national interests. The allure of quick gains must be balanced against the long-term costs. The stakes are nothing less than economic sovereignty. Closer economic ties with China could diversify Philippine exports and spark a manufacturing boom, attracting Chinese factories and technology. But this prosperity comes with a catch-growing dependence on Beijing. If China becomes the main economic engine, Manila's policy choices could be shaped by Chinese interests, especially in times of dispute. Cheap Chinese imports could also devastate local industries, leading to job losses and social disruption. The government must protect domestic businesses and avoid trading one form of dependence for another. The challenge: reap the benefits without surrendering control. The wrong move could hollow out the nation's economy. The gravest risk facing the Philippines today isn't just economic, it's a matter of national security, sovereignty, and the future of the region. As tensions rise in the South China Sea, the country finds itself on the front lines of a geopolitical struggle that could reshape Asia's balance of power. The Philippines and China are locked in a tense and escalating standoff over the South China Sea, with daily confrontations at sea. Chinese vessels routinely challenge Philippine patrols, creating a climate of constant uncertainty and risk for Filipino fishermen and naval forces alike. While economic ties with China offer the promise of investment and growth, they come with strings attached. A deeper Chinese economic partnership could undermine Manila's ability to defend its maritime rights, as Beijing might leverage its financial influence to pressure the Philippines into silence or compliance. This puts President Marcos Jr. in a difficult position, potentially forcing him to choose between safeguarding the nation's sovereignty and pursuing much-needed development. The pressure to balance these competing interests is immense, with every decision scrutinized at home and abroad. The U.S.-Philippines Mutual Defense Treaty, long considered the bedrock of Philippine security, could be weakened if Manila is seen drifting toward China. The alliance with the United States has provided a security umbrella for decades, but that trust is not unconditional. If Washington begins to question Manila's commitment, the United States may hesitate to come to the Philippines' aid in a crisis, leaving the country exposed to external threats and diplomatic isolation. Manila now risks alienating both superpowers, economically tied to one, yet potentially estranged from the other militarily. The delicate act of balancing these relationships grows more precarious with every incident at sea and every new investment deal. In seeking balance, the Philippines could end up isolated and vulnerable, caught between rival giants with little room to maneuver. The nation's leaders must navigate these treacherous waters with caution and resolve. The stakes could not be higher. National security, independence, and the very future of the Philippines hang in the balance. Washington would see a Philippine pivot to China as a strategic betrayal. The U.S. could retaliate by scrapping the 19% tariff deal, imposing even harsher rates, and slashing aid. American influence in global financial institutions could block loans to Manila, while public criticism would aim to isolate the Philippines diplomatically. Most crucially, military cooperation would be scaled back, leaving the Philippines without vital support. The U.S. sees the Philippines as a key barrier to Chinese expansion. Losing Manila would be a major blow. Washington's response would be swift and severe, to deter other allies from following suit. The message breaking ranks comes at a steep price. Manila's choice could redefine its relationship with its oldest ally. The Philippines stands at a crossroads, its decision poised to shape the Indo-Pacific's future. A deal with China could bring prosperity, jobs, and modern infrastructure, if managed wisely. But the risks are real debt, dependency, and a loss of sovereignty, especially in the South China Sea. The world is watching. Manila's move could trigger a domino effect, shifting the region's balance of power. The challenge for President Marcos Jr. is to secure growth without sacrificing independence or stability. The stakes are national destiny and regional order. Can the Philippines walk the tightrope between two giants? The answer will define its future for generations.